Now, an example on US session here. So this is just before US opened. Now, as I've said, this is Euro USD. So there isn't an Asian currency in the pair. So all we're looking at is US zones. Really simply, all we're looking at is US zones. So initially, what we have on is the previous day's US high. We could get a break and retest above that, then a push to the upside. Or what we'd like to see is a pullback. Now, the higher time frame bias on this is bullish. I don't need to break it down, but the higher time frame on this is bullish. So we're only looking for buys. So we could have a break and retest of that. Or if we look to the left of the previous US sessions, we could have either a rejection at this zone down here, because that is the US high from the Tuesday. And you can see it was rejected in London. So we could have a rejection of that zone. Or what we had on Monday was this zone right here. If I drag that across. So we had that zone right there on Monday, which was Monday's US high. So now we have these zones right here. I wouldn't expect price to go below there, or we would be breaking that low and it would be bearish structure. So we're looking for either a pullback to one of these two, or we're looking for a break and retest of this, then a push to the upside. So onto the 5 minute again. And just like London session, we're looking to see what happens. Hopefully we can get a pull down to one of these zones, a rejection, and then we can buy to the upside. So if I play it out, US opens, what does it do here? It's now tapped into the zone, and you can see we are starting to reject right there. So as soon as you see this, a tap into the zone, even on this candle right here, you can start to buy because price is showing rejections at the zone. So if I was to buy right there, really simply, in terms of target, if I just put my stop, I'll change that stop in a second. But if in terms of target, you'd either target that zone right there. If you weren't taking a profit there, 52 pips is a lot on Euro USD, by the way. If you weren't taking a target there, then you would go break even at that point. If you wanted to target further, if we go to the left, what happened the last time US was at this price? Well, we had this US high right here. If I drag this across, then you could have potentially targeted this if you wanted a larger trade right there. But as I said, if you were targeting there, you would have to go break even at that point. There's no exceptions. You have to go break even at that point. Now, if I chuck it back on the 5 minute, an important rule here, I put the stop here. You can't really be doing that. What you want to be doing is putting the stop below the actual zone, because the price could come all the way down to the bottom of the zone and then reject a bit there. So having a stop, which is in the zone, is not what you want to be doing, because, as I said, price could come into the zone, react, and then push off. So not until the zone is actually broken is this zone been invalidated and the trade been invalidated. So knowing this, you have to put your stop at least below the zone. It would be the same just for this. Now, it's a bit annoying when the zone is big like this, but the zone is not often big like this. So knowing this, our stop is down there. Our take profit is up there. I'm just going to play this one out and show you what happens. So price does actually bounce off of the key zone right there, which, if I just show you again, was Monday's US high. Again, this is a clear bank zone. If I type note, it's a clear bank zone. This is how the markets move in sessions. So price is tapped in. If you weren't taking profits there, which you probably should have been, because 50 pips, as I said, is a lot, and it was at least a 1 to 2 risk to reward on this Euro USD trade. If you weren't taking the profits there, you would have to go break even at this point, and then look at what happens. Price actually does reject it a bit, but then it does break above, and then it pushes all the way up to your TP up there. So that is how you can pretty simply, in a quick way, take trades on London session and then on US session. So remember, we're looking for a push. If I draw it on, so say we have a zone, we're looking for, if we're looking for buys, we're looking for a fake out push to the zone and then a push to the upside like that, and a continuation. Or we're looking for a break above. If there's a lot of bullish momentum, we're looking for a break above, a pullback, and then a push to the upside like that. And obviously for sells, if we have a zone like that, we're looking for a push to the zone, fake out push like that, and then the rejection, then a big push to the downside. Or we're looking for, just inversely, we're looking for a break and retest like that, and then a push down from that zone. So how do we know what to look for, sells or buys? Well, that's where it comes from the higher time frames, as I've shown you. Now, whilst I'm actually on this example, what I'll show you is in terms of the actual higher time frame bias, why it's so important. You can see that this right here was our US zone that I drew on just before, and that is a strong rejection candle of that US session zone. So if the directional bias was bearish, that's a very, very nice selling opportunity because it rejected that. But it's not, because we're only looking for buys because price is bullish. You would not sell, because if you did sell, this is exactly what happens. Price pushes all the way above it and you would have got taken out. So that is why you have to stick to your higher time frame bias.